Good afternoon, everybody, and welcome to the first one of these live trading sessions. Hopefully you can all see me today, so the camera is working. It's probably been a reasonably quiet day from a trading perspective. The markets or the indices have moved higher, but are stalling slightly above the levels that we are at the moment. So the thing that we want to focus on over the series of these that we're going to run is looking at trading at different times of the day and when different events are occurring. So whether that's non-farm payroll or some other event that's occurring during the course of the week, we'll do that. So I think Sam is going to run a few polls in relation to the live trade sessions and around which event you want to do it, so that it's so that we're delivering what you want. Obviously, as I've mentioned numerous times over the last number of weeks, months that you've been with us, there are certain times of the day that you can guarantee movement, and there's two of them really, and those regardless of what events are going on during the course of the week, there's two times of the day that the markets will move, and they'll move reasonably aggressively during the next 5 to 10 minutes of trading. And that's the opening bell in Europe and the opening bell in New York. And you can guarantee movement around that period. So if you can set yourself up correctly and you're right about the markets during that particular period, you can have some fairly quick trades during that period, and could set you up for the rest of the day effectively. So we're going to look at one of those today. We're going to do the New York Open. We're about 15 minutes early for it, so the bell goes in 15 minutes, and then you'll see a lot of movement in the next 5 or 6 minutes. Typically what I tend to do during this period, if the trade works, happy days, I'm out for the trade in that 5 or 6 minute period. But then I'm looking to exit the trade after a maximum of 7 or 8 minutes. So certainly within the 10-minute period that we've got set up today, I'd be looking to exit the trade. So trying to benefit from the movement that we're going to see in that period. And what you tend to see, and obviously I'm trying to, this is where I can really mess things up. You tend to see movement both above and below the starting point at 2:30. Rarely, I'm not going to say it's never, but rarely do you see the market move in one direction and stay moving in that direction. So there's a certain amount of juxtaposition both below and above the line of the market at 2:30. So you do get some opportunities, even if you're wrong on the trade, that you can reduce the damage. So Jay is asking, will the live stream be available for replay later? It's not the question for me, Jay. I'm sure it will be. I'm sure that Sam has that under control, and you'll probably see a response from him in a couple of minutes. Ideally, when you're coming into this particular period, you want to be reasonably flat. I have a gold trade on, which I'm not too worried about in relation to this trade, but I also have a DAX trade on that I could have and I should have scratched in the last 10 or 15 minutes as we traded back down to that level. So what are the reasons for the movement? Obviously it's the opening bell. So you in any market, and this has dissipated a certain amount over the years, but you see a number of market on open orders, so orders that are already in the books prior to the opening bell, and there can be a certain amount of spoofing, and we've spoken about this previously, during this period when all of the buy orders may go in, then they're matched up by the sell orders, then the sell orders overtake, and so the futures prices are moving around a lot based on the orders that or the order flow that they see going into the market prior to the opening bell. You also then have all of the programs and algorithms that exist in the world these days, which will trigger and trade throughout the course of the day. A certain amount of those will be done at the open. So with the Dow, because the Dow is the one that we focus on and we trade more than any other, there are 30 stocks that are going to open. They're all going to open up at different times in that first short period of time. So as they're opening up at different particular times during that 5 or 6 minutes, you'll see a lot of movement within that period as the different stocks open, and then there will be a short period of consolidation, and then the market will tend to move in one direction or the other from that point. So the ideal part of the market, or the main part of the market that we're looking to take advantage of is just during that opening period. So the algorithms, the program trades will do as they will. There are a number of ways that trades will be executed, be that off the volatility, be that off the volume, be that off the price action that they're seeing in the markets, but they're all programmed in and they're all ready, willing and set to trigger. And so all of this will be going on and is exaggerated, in my opinion, or exaggerated is not the right word, magnified in this first 5 or 6 minutes of trading. So that's what we're going to look at today. So we'll just open up please ask questions. This isn't intensive enough that I can't answer questions, but we're going to start by the Dow is obviously the market that it is opening, so that's the one that we're going to look at. This is a minute chart, just looking on the minute chart, showing what we've done today. We've been up to a high there of about 29,560. We'll forget about the bits early this morning when we traded down a little bit lower, but if we look at the most recent lows here, just take that down a little bit, or about 29,440, and we're somewhere within the middle of that range at the moment, trading at 29,500 as we tick up a little bit at this particular time. So there's been, if we then bring this into a 5-minute chart, you'll see the reasonably narrow range that we've traded in during the course of today. Early this morning, just trading down below that 29,400 level for a brief period of time, only a brief period of time, and then we've obviously rallied back to where we are now, and we're currently in the middle of this range. What I would expect to see around the opening bell, and the key is, I suppose there's a number of keys here. So Porik is, I'll answer Porik's question in a minute. So I did also make a tea before I started this session as well, so I'll probably drink some of that in a second. So we're in the middle of the range, or certainly towards the middle of the range that we've seen today, and depending on where we are when we get closer to 2:30, there will be what I would expect to see is a movement down towards this line, and possibly a move closer towards the upper line as well. Porik is asking what triggers do I use to take a trade. To be honest with you, Porik, around this particular period, it's just really trying to benefit from that particular movement. So I think what you'll see when we get to 2:30 and the level that we're trading at, you're going to see movement both above and below the line. You could almost do a buy trade and a sell trade if there was no spread, and then take advantage as it comes in, into profit. As I said, very rarely do you see the market run away from this particular point during that first 5 or 6 minutes, and you get this juxtaposition and movement in both directions. What I like to do personally is develop a bit of a bias as we come into this period, and we'll either trade short or long based on my opinion of where we're immediately going to go. So it really is just a 5 or 6 minute trade. I'm not looking for anything longer than that. I'm just looking for the way that it opens. Probably 7 times out of 10, you do see a movement to the downside initially until the markets start to garner a bit of support, and then you may see a movement to the upside. So for those of you who've been with us for several months, and we used to speak about this trade, it was always a short into the opening bell, buy back 30 or 40 points lower, and then possibly benefit from a movement to the upside thereafter. Hasn't been quite so regular, the movement. I mean, if you look at patterns, as I sent out a short voice note this morning about the gold trade that I've done early in the morning, and we've seen that pay off for 3 days in a row, where we sell gold prior to the opening of the European bell and can take a decent amount of profit, 30-40 pips, around the European Open. So gold trading up a little bit too buoyantly during the Asian trading zone, and then the European traders, when they first get in, selling it off a little bit. So what I'm looking, Porrick, when I look at this market now, is I'll be looking at the DAX. Again, I'll just bring up the DAX so we can have a look at it. Struggling as we get up to, and there's another question in that is a little bit related to this as well. So DAX struggling when we get up to 13,230, and struggled over the last period. We've got a 5-minute chart here. Even if we widen it out to a 15-minute chart, you can see a couple of little jumps above that 237 line. So the question in from Chris is, what do I think it will take the market to push to 30,000 again? I think there are a number of things. So just looking at the DAX at the moment, we're trading up towards that higher level. So as you can see here, hitting resistance around the 237 level. If you look at the Dow, and I'm just going to widen this up to a longer dated market or a longer dated chart as well. So if we take this out to an hour, you can see the movement the other day where we did go up fairly close to 30,000. I'm not sure that we touched it, although the screen is telling me that we did. I think if we were, personally, when I was watching it, I think that we moved to within 2 or 3 points of that level, off that big spike that we see here. So again, you know, you've got the range that we've seen today, which is shown on your screens. Jumped above there, probably for a total of 3-4 hours, settled back down around this 560, probably 600 level. I think 600 is going to be the first hurdle that the market is going to have to overcome, just getting through that level. But obviously we've got this big movement, clear skies above us, very difficult to trade in this area, and you'll see with my trading over the last couple of days, it's been very quick. Getting into the market, getting out of the market very quick, and not running trades for too long, because they can get painful very, very quickly. But there's, you know, the markets are really quite jumpy at this particular time. So looking at these two markets, and again referring back to Porrick's question in terms of the triggers, I think both the Dow and the DAX, as I look at them at this time, and I am short the DAX at the moment around this level, not too far away from it, I think we are trading at the upper part of the range. So sometimes, and this is again is quite frequent, during the European trading session, we tend to overshoot the opening bell in New York. So the market has moved a little bit higher than we're going to see on the opening level, and you're going to see a lot of movement in this next 3 minutes as we wait for the opening bell. Now sometimes, and we can talk about this a little bit later, because you've got 20 minutes or half an hour in the run into the opening of the Dow, if you're looking at this from 2 o'clock in the afternoon, you can start to develop a bit of a bias, and it may well be that you have such a strong bias in terms of where the market's going to go, that you are happy to short earlier, so about 2 or 2:10. And you might get a bit of a sell-off, can take profit, and then could get back into the trade near the opening bell. So as I mentioned yesterday, with a couple of the DAX trades that unfortunately didn't go or weren't repeated as often as they should have been yesterday morning, you are going to get opportunities to repeat trades, and this period is one of those. If you have a strong directional opinion of where we're going to go. So based on what I'm seeing on the screens, I'm going to be looking to make a decision. Firstly, in the next 2 minutes, I'd like to see the Dow jump up a little bit back towards 29,500 and look to short the market at that point and possibly take 25 to 30 pips out of the market in those first couple of minutes. So Chris's question about what will it take to push the market to 30,000 again. Year end, year end is a good time to see a rally in the market. I think there's every possibility, and with Joe Biden now president-elect and having his transition team in place, I think there's going to be opportunities for stimulus, number one, whether that's going to be as far-reaching as people are expecting, and some developments with the Biden administration could be sufficient to take us to 30,000. Will we stay there for long when we get there? I really don't think so. I think there's enough negatives out there at the moment with coronavirus and everything else that's going on. We're going to continue to see legal challenges, as bizarre as they may seem, from Donald Trump. So we're getting close, very close to the opening bell now. I'm gonna, and this is where I can shoot myself massively in the foot in relation to the markets as we're watching this live. But I'm probably gonna sell the market at this point. So we'll just, after I've done this, we'll sell 294.88, and then we'll just revert back to a minute chart, and you can see some of the big movements that we see. Now I could have waited, and had I waited, the markets would have been 10 points higher. So I'm still not getting 230 on my screens, so we're 229 at the moment. Markets are opening, and the markets are open now, and you can start to see the big movements that we're seeing from this point. So you've got the trade level there picking up a little bit. Got a minute chart on here, so it's a fairly you're going to see the movements exaggerated on this. I'm just going to move, so we've moved a little bit lower there. Just putting a TP in there at 29,472, and that's taken already. So you can see the benefit of this period. And so whilst the trade is done and I'm out of the trade, we're just going to watch now and see how much more could have been taken out of that. So you can see there that obviously there was more that you could have taken out from a profit perspective. What I wanted to do was just to show you what we try, or what I'm trying to generate during this particular period. Just going to have a look at the DAX whilst we're there. The DAX hasn't really moved a great deal, and yet the Dow still keeps coming off. So going back to the Dow, as I had sold at 29,480, you're now at 29,440 and 40 pips worth of profit. So you can see the way that we've been down there to the extent of the movement on the downside. And what I'm expecting to see now, although we're very early into this move, that was a 1 minute trade. You could have taken up to 50 pips out of the trade. We sold at 29,480, bought back around 29,460, but the move was considerably more, and you could have taken more out of that. What you'll see over the next couple of minutes, though, is you will see the market stabilise. And then decide upon the movement. So as soon as the 30 stocks are open, everything's trading as normal. You just won't get this juxtaposition over a short period of time. And now we're pushing back up. As you quite often see with this particular pattern around this time. So, you've seen the extent of the movement there down to the lines that we drew earlier. And then we've bumped up a little bit from those levels, and are stabilising as those stocks open, and see where exactly the market is going from this particular point. So I suppose number one, it's always good when a plan comes together, although they haven't been coming together too well lately. Again, we're trading down at the end of that range. Would I buy now? I probably wouldn't. Looking at the markets as we did prior to the opening bell, I think the upside is limited until we get some news. So whether that's vaccine, and so going back to Chris's question, vaccine and a number of other companies having successful trials and more vaccine coming to the market between now and Christmas, which is what I expect. I think that could push the market higher as well. So there's a lot of positive things out there that can happen to the market to push us back to the 30,000 level. But I am conscious of the negatives that exist as well. Whether Biden has full control over government in the US, whether it's going to be easy to pass things through Congress or not. Obviously, coronavirus ongoing, and the economy that will stutter if lockdown continues. Although the vaccine has obviously given us a slightly better view in relation to that. So the DAX, thankfully, is starting to trade off. I had a TP in earlier at 13,200. I've cancelled it. It's certainly the DAX is a lot stronger than the Dow at this time. The Dow has fallen, as we've seen from that trade at 29,480. We're now trading 29,408, 404. For those of you who had and breaking through 29,400 as we talk. So for those of you who've held on to that trade a little bit longer than myself, you've done particularly well out of that trade. And the DAX trades at 13,200. So I'm probably just going to close this trade just to be done with it. I do expect the Dow to find some support, possibly in this region, and I'd rather be out of the DAX position. Been holding it for far too long at this particular time. So you'll just get a notification through there that I've closed the DAX position. So there are no further questions. I'm not going to trade again at this particular time. I'm just going to close out my gold trade as well that I have open. There's about 20 pips worth of profit, or there was 20 pips worth of profit in that as I started to speak. It's gone a little bit lower now, but I will take profit in the gold in a couple of minutes. And there you can see the Dow's gone below 29,400 now. If you took that trade, you're well over, you are 100 pips in profit at this particular point. What I wanted to show you was entry and exit within that 5 or 6 minutes. Should have held it a bit longer. Easy to say with hindsight, but thankfully it worked out well, and hopefully a few of you took that trade and understood some of the rationale. So from Porig's perspective, in terms of what triggers it, it's nothing technical. It's just my opinion on what's going to happen in that first 6 minutes. And you do, and it didn't really occur today. We've tended, there was that little jump at the beginning where if I'd waited to bang on 2:30, I probably would have got the trade away at 29,490. But we have pretty much traded in one direction from that point, and now are down at 29,370, 380. It's not seen the bounce that you see. We're 7 minutes into the market open now, and I would imagine, I don't have any graphical proof for you or obvious proof at the moment, but I would imagine that all of the stocks are open at this point, and we're starting to see some fairly normal trade. Looking at the market at this particular point, and you've got that strength in the DAX still trading at 13,200, the Dow at 29,380. I think that we might see a bit of a bounce in the Dow from this level. There aren't any further questions, so the first 7 minutes of trading are open. Rather than me rambling on without doing very much, I think we'll probably call it to a close there, and Sam will be in touch with some questions about when you would like the next live trading session next week. If there is a particular event next week, we'll give you a few options, and then we'll go with the majority, and that's what we'll do. Thank you very much for joining me today, and hopefully you all took that trade and was short the Dow over that opening period. I do think we might see a bit of support coming in now.